Hi, everybody. This is Jason Wei, Associate Dean of Tsinghua Institute of FinTech Research. I'm the moderator for this session. I would like to introduce Mr. Robert McCooey, Senior VP from Nasdaq. We're very happy to have Robert here with us today. Just as a quick introduction, Robert right now is in charge of business development of new listing in Latin America and Asia Pacific, two very exciting markets. And also, Bob is responsible for relationship management of companies throughout all the corporate life cycles. I've known Bob for a couple of years. I know that Bob has taken multiple leadership roles at the Nasdaq in the past 15 years, and before that, Bob was a successful entrepreneur in the security industry, and he also served on a number of committees at the New York Stock Exchange. So we're very happy today to have a veteran from the security industry and the global capital market to talk with us about his views regarding the global capital market in the post-pandemic world. And I want to also share one fact. 2 years ago, I was able to invite Bob to give a keynote speech at the Global Finance Forum of PBC School of Finance at the Tsinghua University. That was 2 years ago before the pandemic. And that speech, let me say, was very well received by the audience. And today, it's my belief that Bob will continue to offer his very insightful observations and also unique thoughts about what he sees as the new trends, opportunities in the global capital market going forward, especially the exciting innovations happening at the Nasdaq. So, Bob, so happy to have you here.
Jason, thanks for having me. I really appreciate it. During that speech, did I predict the pandemic? I'm not sure I did predict the pandemic.
Unfortunately, yeah, I don't recall, but I guess that's a good thing. That's a good thing.
Yes, it's definitely a good thing. And I'm going to share some slides to guide us. And also, I know that Jason will be collecting any questions that you have from the audience. So at the end of my talk, if we still have some time, I will be happy to answer as many questions as I can. But
sure.
Let me see if I can find my find the right page here on my Zoom. Show all windows. Of course, I can never find my right page to be able to show you my screen.
There we go.
There it is. There we go. So we'll talk a little bit about Nasdaq, but I think we'll spend most of our time. You can hear my dogs barking in the background. That's a factor of the pandemic too, which is that there have been more and more animals who have been adopted here in the United States, and more obviously people working from home. But I think the interesting thing about what has happened is that the markets really didn't miss a beat. We are at this year record numbers already of new listings in the U.S. We will be next week surpassing 650 IPOs on Nasdaq alone, and the U.S. markets will likely do, or I can almost predict that will do, well over 1,000 IPOs in the U.S. capital markets in 2021. When you look at the 650, we also look at that and combine it with over 80 business combinations. So as I'm sure you all know, one of the big phenomenons in the US over the past 3 years, and which other exchanges around the world are following, is this SPAC phenomenon, where there are many companies many financial sponsors who are raising SPACs, and SPACs are all about creating the opportunity for there to be business combinations on the other side. And we've done over 80 of them so far this year. So we're well over 700 new operating company businesses listed on Nasdaq, and the rest of the year continues to look very bright. We saw this week Rivian, which is an electric truck company. They're going to raise about $10 billion US on a $65 billion valuation. And I'll talk a little bit about mobility and the transition to electric vehicles and their investment thesis that's been going on in the US over the past year or two. And they've been a big recipient of the dollars of the SPAC boom that's gone on. But we really have had an amazing run of companies who have listed on our market this year, some global champions, some very interesting niche businesses as people move to understanding how to deal with the climate crisis that we have, move to battery development, electric vehicles, electric trucks, and then even autonomous vehicles, where earlier this year we had the IPO of Too Simple, which a lot of its core business, some of its technology and its founders were from China. And then most recently, just this week, we saw the listing on Nasdaq of Aurora, which is another autonomous truck company, just this past Thursday, which did a business combination with Reid Hoffman's SPAC, who was the founder of LinkedIn. So we today at Nasdaq just have been the beneficiaries of, as we would say in the US, the wind at our back. We've had a very strong market, a market that has continued to accelerate higher overall since the pandemic started. We had a couple of months of March and April of 2020 of being a lot of pressure on the market. But since then, we have been consistent in terms of delivering on IPOs. As I said, we did 316 last year and 650 this year. Just to put the 650 in perspective and next week in perspective, next week we have scheduled for 29 IPOs. And in 1 week, I've been at Nasdaq, as Jason mentioned, for 15 years and had the great honor of leading our Asia Pac business for 13 of those 15 years. But one of those years was 2009. In 2009, for the entire year, we had 29 IPOs. And next week, we have scheduled for 29 IPOs. So just to give you the scale of the 52 times as many IPOs as we're seeing that we saw in just 1 year. But for us at Nasdaq, we really look at this as a global business. We have a very diversified global business ourselves. We have listings from all over the world. 15% of our companies are non-US. And when we think about our listings business, we really focus on one very interesting philosophy, which is most companies belong in their local markets. So if 15% of our companies are non-US, that means 85% of our companies are US companies. And among those 4,900 companies, the vast majority of them are in the US. But for us, we think that if a company decides that they are going to list outside of their local markets, that Nasdaq is the right place for them to list. And so that's why we've been in China since the 1990s. We were the first exchange to open a rep office in China in 2007. But we also have a fundamental philosophy that we are going to be empowering the global markets. And how we do that is not just by listing companies on Nasdaq, but it's also by executing on things such as our market technology business, which powers 130 different exchanges around the world. We're partners with the Hong Kong Stock Exchange and then in their derivatives business. We power the Singapore Stock Exchange, Indonesia, Australia, Malaysia, every exchange in the Middle East are using Nasdaq technology to execute trades each and every day. And as you would suspect, with the huge focus on healthcare and technology, which are the biggest sectors, as you can see, 48% of Nasdaq companies come from healthcare and technology. We have done exceedingly well in terms of the total global market cap of the companies that have listed on Nasdaq over the past years, and now we've seen, as of this week, the top 7. So not 7 of the top 10, the top 7 largest companies in the U.S. capital markets are all listed on Nasdaq. And when I came to Nasdaq 15 years ago, we had one of the top 15 companies, not number one, just one. And today we have all 7 of the largest companies in the U.S. markets, and that certainly goes to the IT and IT sector and how well they have done throughout the pandemic. And just to give you a little sense of some of the global leaders that we have as part of our family, 5 companies from China that are part of the Nasdaq 100, some of the leading healthcare companies from around the world, not just the Amgens and the Biogens and the Regenerons and the Modernas that we've heard about so much over the past year, but fantastic companies like Beijing and Zai Lab, and most recently, the most recent listing on NASDAQ just this past Monday was Lian Bio. So when everyone says that Chinese companies can't come to the US, yes, there is currently a restriction on them on both sides, but we are seeing Chinese companies in healthcare look to the U.S. markets, and we do hope that there will be opportunity for other companies to come to the U.S. markets too. And finally, one of the most interesting things about NASDAQ when it comes to our largest companies is we run the index that is inclusive, that actually allows for companies to come to the U.S. and be part of an exclusive index, the NASDAQ 100. And as I said, 5 Chinese companies in the NASDAQ 100, Pinduoduo, JD, Baidu, Ctrip, and NetEase, but also Mercado Libre, a $80+ billion company from Buenos Aires that operates mostly in Brazil, and number of companies from Europe that are all part of the NASDAQ 100. I mentioned that we have done very well in terms of IPOs and Asia Pac IPOs, which have certainly slowed down since the middle of this year because of the prohibition by the Chinese government on companies from China to list in the U.S., as well as some new regulations that have come out of the U.S. SEC. But at the same time, we've also seen an increase in the interest in the U.S. capital markets, especially NASDAQ, coming from companies in Southeast Asia. So as you know, later this year, Grab, which will be the largest business combination with a SPAC ever done, will come to NASDAQ and will list before the end of the year. But we had seen a very large influx of Chinese companies in the first half of this year, and we're hoping that once the regulations ease, that will open up for opportunities for more and more companies to come. And in fact, even during the pandemic, we have seen so many of these companies, including the one that I'm highlighting here, Bilibili, do exceptionally well in terms of their performance to the market during the time of the pandemic. Chinese companies are an important part of the U.S. capital markets. I'm using the valuation kind of before all of the volatility that has gone on since the proclamations from both Beijing and Washington. But earlier this year, you can see they're $2.1 trillion of capitalization of Chinese companies that are listed in the U.S. 200, almost 250 of them now with Lian this week. There will be 250, basically 250 of those companies that are listed with us, and we're excited by that opportunity in two ways. First of all, it highlights the fact that entrepreneurship is not something that is exclusive to Americans or exclusive to our market. There are fantastic entrepreneurs all over the world. And no matter where you go in China, whether you go to Suzhou or Zhengzhou or Hangzhou or Guangzhou, you see just amazing entrepreneurs building tremendous businesses. And these are global businesses. And they are businesses in healthcare, they're businesses certainly in technology, in financial technology, businesses that they're growing. And the second part is that U.S. investors want access to these businesses, want access to these entrepreneurs, to the great ideas that they have in an amazingly large total addressable market. There's 1.4 billion Chinese consumers. There is just a growing amount of wealth that is in China, and so we certainly want to make sure that investors in the U.S. are able to access these fast-growing companies that are selling into this amazingly large market. But at the same time, Chinese listings were certainly on a record pace for this year, and as you can see, just coming off of my last slide, was over $6 billion of almost $7 billion worth of raise by Chinese companies thus far this year, and we, as you can see, the trend was increasing. 2018 was very strong. Obviously, as you go back to some of the earlier years, you see more and more Chinese companies who are coming to the U.S. to raise capital, and therefore you also see them looking for other alternatives, and the other alternatives are coming through either domestic listings, which, as I said, a lot of companies do belong in their local markets, or a domestic listing through the Hong Kong market. Hong Kong has been very aggressive in changing their rules under former chairman and CEO Charles Lee. They changed their rules to allow for dual class structures of companies. They allowed for companies that were loss-making companies, two areas that they had prohibited back before the rule change in 2018. They have really focused on growing their technology and biotech listings in their market. And so that is one area that they've been very successful at. The other, obviously, is to ask for Chinese companies listed in the US to come back to the more local market by being listed in Hong Kong, and therefore have their shares be more globally traded and also be more available to local investors. And so Hong Kong was good at getting first Alibaba, which back when they went public in 2014, their first choice was to list in Hong Kong, but obviously the prohibition against dual class structure, which they had, prevented them from doing so. So once the rule set changed and companies like Meituan and China Tower and Xiaomi and others started to list there, you had the opportunity for companies to choose to list in a local market, and certainly the performance was good. Technology listings were growing in Hong Kong, and therefore Alibaba chose to list or dual list their shares there, taking a small amount of those shares and allowing them to be traded. I believe the number was 13 billion at the time to be listed. And out of 13 billion, obviously a huge raise, but 13 billion relative to the size of Alibaba at $500 or $600 billion market cap is only a small slice of their overall market cap. And that gave the validation, the opportunity for other companies. And we've seen virtually all of our Nasdaq 100 companies. We've seen Beijing and Zylab and GDS, the big data center provider listed on Nasdaq, all decide that they also wanted to list in Hong Kong. And so we see that among some of the largest companies that wanted to have a more local listing. And that has helped to drive the number of IPOs, but also the amount of funds raised in Hong Kong, as all of these companies do a raise in conjunction with their dual listing on the Hong Kong market. We at Nasdaq, as I've mentioned, have been in Asia and specifically in China since the 1990s, early 90s, talking to companies about the benefits of a Nasdaq listing. We were the first we did establish the first exchange representative office in Beijing in 2007. And we have over 750 employees all across the region. Teammates for me are not only in our office in CBD in Beijing, but also we have a large office in Hong Kong Central and offices in, as you can see, Singapore, Australia, 2 offices in Australia, 2 offices in India, 1 in Japan, 1 in the Philippines, also South Korea. We have an office. So we are very well positioned in talking to companies from throughout the region, and look forward, obviously, to continuing our dialogue with companies from China as they think about their positioning into the US markets or into a market in the future. And just touching on some of the amazing companies that we've had listed with us just in the past few years. As I mentioned, Grab will be later this year, but Li Auto last year, iQIYI just a few years ago, Too Simple earlier this year. It was an honor for me to be in Shanghai just over 3 years ago for the listing of Pinduoduo, and just to give you a somewhat of a representative sample across the 170 companies from China that are listed with Nasdaq. Before I ended, I did want to talk about a couple of areas of interest. New mobility, whether that is the ability for companies to build businesses that are focused on the decarbonization that we need to do in our world today, focused on electric vehicles, focused on ride sharing and the gig economy. And so we've seen companies like Lyft, most recently a company like Gogoro out of Taiwan, who has a significant presence and partnerships across China, will be listing with us before the end of the year. Lucid, which is currently the largest business combination. There's the Lucid car, which has now rolled out. They are a EV car company. Li Auto, Velodyne LiDAR, which creates the LiDAR systems, which a number of these cars rely on to make sure that they can go, or even infrastructure plays such as EVgo, which Tesla has built out a wonderful network of charging stations around the US, but as more companies like a Lucid, like a Fisker, a Lansdowne, a Velodyne, as more and more, Lordstown, as more and more of these companies are coming to market with their vehicles, they need to have access across the country for, just like we have for gasoline, to be able to charge those vehicles. And companies like EVgo are building the infrastructure in order to do that. But also when you talk about mobility, one of the most interesting areas of mobility is aerial mobility. And Yihong, which went public with Nasdaq about 2.5 years ago, is a leader in aerial mobility. And out of Guangzhou, they've created some amazing technology there that has been used by others and everywhere around I lost my light here. everywhere around the world. And we have seen them actually do a most recent deal in Italy. They are working with different governments, with different provinces, as well as large cities to implement their technology for managing aerial transportation. And so we've seen companies like Archer through a business combination and a few others in the US try to replicate exactly what Yihong has already led in doing. So we're excited about their future, but also about the future of mobility. We've excitedly brought the Nasdaq bell to China a few times in the past few years. The one on the upper right with Pinduoduo, I was there for that exciting day back in July of 2018. And then later that year, we were able to celebrate the 15th anniversary of the listing of C-Trip on Nasdaq. And so it's not only about having companies come and celebrate with us in Times Square, but if we can find the right opportunity, actually bringing the Nasdaq bell to China to be able to celebrate and highlight some of our companies. And I'll just quickly go through why companies choose to list on Nasdaq. Clearly, from left to right, I've talked a couple times about the fact that we have an index that allows for non-US companies to be a part of. The other two major indices in the US, the Dow or the S&P 500, exclude companies that are non-US. Nasdaq is an inclusive culture, and that all goes all the way down to the companies that are listed with us and the indexes that we create. So having companies that are non-US be part of the 100 largest non-financial companies listed on Nasdaq in the Nasdaq 100 is really important to us. We provide all of the service and support numbers 3 to 6 at a most significant cost savings. So relative to our domestic competitor here in the US, we cap our ADR fees at under $100,000, currently at $84,000, where our competitor charges up to $500,000. We know it's a tough transition from private to public. So Nasdaq, starting in 2005 and continuing today, has built out the world's leading corporate services to help companies with that transition from private to public. We provide some amazing enhancements and amplification of companies as they become public companies, and whether that's celebrations locally, certainly celebrations in New York. We really feel like we've got some tremendous PR support for our companies. Companies do like to be associated with our family of the now 7 largest companies in the US capital markets and 7 of the 8 largest companies in the world. The only other one is Saudi Aramco in that group, and not even listed in the US. So we're excited about companies that want to be associated with the companies of the future and the new economy, those that have been changing the world over the past 25 years of innovation, of growth, of entrepreneurship. And those are really the core attributes of Nasdaq, the DNA that supports them and supports us. And finally, we provide the most efficient trading platform in the world. There wouldn't be 130 different exchanges around the world buying our state-of-the-art technology platform if we didn't have the best one in the world. We also have the deepest liquidity pool for companies to trade in on our market each and every day. So I think the rest of it, Jason, I don't want to get you behind time with your busy schedule. So why don't I leave it there, and certainly happy to answer a couple questions if there are any in the remaining time we have.
Thank you so much, Bob. Yeah, I think we might have maybe 10, 15 seconds for a quick question.
Sorry.
Which is kind of obvious, but I still want to ask, in terms of IPO growth in the next 5 years, besides the United States, which country would be your top choice?
I think what's the area that we're seeing the most, there's 2 areas that we're seeing the most opportunity. One is throughout Latin America. So Brazil has come on very strongly over the past few years. They went through 4 or 5 years of a barren winter of no IPOs, and we'll have about 12 IPOs, mostly from Brazil, coming to US markets this year. And then country, I would say, is more specifically to a region. Southeast Asia is a tremendous area for growth. So whether it's Singapore, Indonesia, Vietnam, Malaysia, and then all the way, down to Australia, that area, which has not produced a large number of IPOs in the US markets, probably present the most interesting area for the next 5 years. And I think over the next 15 years, then you start to go into places like Africa and potentially some from the Middle East that would want to be listed in the US.
Great. Thank you so much, Bob, again, for the wonderful sharing. And definitely look forward to seeing the bell being moved to China sooner than later.
I look forward to seeing all of you. I really appreciate the opportunity to be with you this morning, and I'm welcoming my next trip to China as soon as it's available to me.
Likewise. Thank you so much again. Bye-bye, Bob.
Bye.